Today we have with us Mr. Ajay Shriram, Chairman and Senior Managing Director, Mr. Vikram Shriram, Vice Chairman and Managing Director, Mr. Ajit Shriram, Joint Managing Director, Mr. K.K. Kaul, Whole-Time Director, and Mr. Amit Agarwal, CFO of the company. We shall commence with the opening remarks with Mr. Ajay Shriram and Mr. Vikram Shriram, following which we will have an interactive question and answer session. Before we commence, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the conference call invite circulated earlier. I would now like to invite Mr. Ajay Shriram to give us a brief overview on the company's performance and his views going forward. Over to you, sir.
Thank you, Siddharth. Good evening, ladies and gentlemen, and thank you for joining us on our Q3 and 9-month financial year 22 earnings conference call. I would like to wish all of you a very happy new year. I hope all of you and your families are staying safe and keeping well. I will walk you through the business developments. Thereafter, Vikram will follow with his thoughts on the financial perspectives. We are glad that our businesses reported an overall healthy performance despite the operating challenges during the quarter. The input and output prices of chlorovinyl businesses were at levels never seen before. The volatility was extremely high and unidirectional. Compounding this problem was the supply constraints. Late rains in the Rabi season posed challenges to the agri-input businesses. Most of our businesses managed the situation well and delivered growth along with better margins. You are aware that we are investing in further strengthening the businesses through scale, integration, and cost optimization across our chemicals, sugar, and Fenesta businesses. Other businesses like Shriram Farm Solutions are OPEX intensive and are growing in scale. In this quarter, we have announced additional investments in the sugar business. These steps will help us maintain the growth momentum as well as manage volatility better. I would now like to take you through the business-wise key developments of the company. Chemicals. The operating environment in the business is very dynamic. The prices of caustic soda moved to historical highs during the first 2 months of the quarter, driven by supply constraints from US and China. The abnormality of high energy prices added to the cost of production, and that went up substantially. Global supplies started getting restored from November onwards, post the hurricane in the United States and end of the dual control policy in China. The current international prices have come down from a peak of about $500 to $550 per metric ton. Going forward, there are planned shutdowns for some US manufacturing plants, and the impact is yet to be seen. Domestically, demand from key consuming sectors remains stable. However, some pressure is witnessed in the textile and paper segment towards the end of the quarter. Domestic chemical caustic soda prices are moving in line with international prices. Chlorine is under pressure due to increased operating rates of chlor-alkali manufacturers and lower demand for some consuming sectors. Input costs have seen significant uptick led by coal and salt prices. We are procuring optimally and using all options to mitigate the impact. We are also keeping enough supplies to ensure there is no constraints on this account. The chemicals business is implementing a 120 megawatt captive power plant, and we are expanding our caustic soda capacity by 850 tons per day and flaker capacity by 600 tons per day. Additionally, the aluminum chloride capacity is going up by 90 tons per day. We are also setting up a 51,000 tons per annum epichlorohydrin capacity plant and 52,500 tons per annum hydrogen peroxide capacity plant. All these projects are underway. They are expected to get commissioned with a few months delays due to the COVID-19 and erratic rains. Project costs are also expected to increase given the reconfiguration of projects based scale efficiencies, market demand, and increase in commodity prices. We are trying to minimize the delays and cost increases. However, returns from the projects continue to be healthy. Vinyls. The global demand continues to remain strong. The prices are still at healthy levels, although the import prices have moved lower since making a peak in October 2021, pursuant to easing of supplies from China and the US. Like in caustic soda, the increase in energy prices have led to a significant increase in input costs. High energy prices pose a risk if the product prices come down, given the nature of the commodities, and more so in the current circumstances. The operating environment is expected to remain volatile. Sugar. The domestic sugar production expectation in the current season is 30.5 million tons. The sugar production till 31st December 2021 stood 4.3% higher at about 11.5 million metric tons compared to the same period last year. In the current season, we saw cane crush of our factories saw cane crush of 212 lakh quintals versus 203 lakh quintals last year as on 31st December. Recoveries on final molasses basis till 31st December for the season stood at 10.5% for sugar season 22, vis-a-vis 10.7% for sugar season 21. Global sugar is expected to be deficit, which will keep the international prices firm. Given that the government has not announced export subsidies, India is expected to export about 5 to 6 million metric tons of sugar in the current season versus about 7 million metric tons in the last season. Currently, the net realization on exports is lower than the domestic prices. During the quarter, we produced ethanol via cane juice route as well as B-heavy molasses. Sugar diverted to cane juice and B-heavy ethanol till 31st December 2021 stood at 4.3 lakh quintals versus 2.1 lakh quintals in the same period last year. We will continue to strive for an optimal mix for our distillery and sugar operations. At the sugar business, we are setting up 120 kiloliters per day multi-feed distillery and increasing our sugar refining capacity from 500 ton crush per day to 26,500 tons crush per day, and expanding our sugar capacity by 3,000 tons per day, among others. These projects are expected to be commissioned within planned time and cost estimates. Agri Inputs. The segment includes Shriram Farm Solutions, Bioseed, and the fertilizer businesses. Shriram Farm Solutions showed good growth on the back of higher sales for wheat seed and specialty nutrients during the Rabi season. During the Rabi season, sowing got delayed due to untimely monsoons, which affected the business to some extent. The thrust on value-added inputs continues, together with focus on research-based varieties with a view to deliver consistently good performance. Bioseed international operations are doing well. For Bioseed India, it is a short season with main season being Kharif. The business is making efforts to launch new products and scale up. We're very hopeful of a better performance over the medium term. The fertilizer business, the operations are stable. However, the urea subsidy outstanding is higher than expected levels given the increase in gas prices. Outstanding stood at 450 crores as on December 31st, 2021 versus 624 crores as on December 31st, 2020 and rupees 153 crores as on 31st March 2021. Fenesta delivered a healthy momentum on the back of enhanced sales in the retail and project segment. Whereas the impact of the previous waves of the pandemic has abated, there may be some impact from the third wave. Order booking was up 43% year-on-year during Q3 financial year 22, with retail segment giving 20% growth in the period and project segment giving 91% growth. We continue to expand capacity, reach, and product range while enhancing service levels in order to maintain a healthy performance outlook. During the quarter, the company acquired the balance 50% stake for his joint venture partner in the PVC compounding business to make it a 100% subsidiary. We are gearing up to deliver better scale and efficiencies through ongoing capital expenditure. With a stronger proposed footprint in value-creating products, stronger integrated capabilities, and enhanced capacity, we are seeking a better and stable profitability across our operations. With this, I will now request Vikram to take us through the financial highlights. Vikram, up to you.
Mr. Vikram, your line is unmuted. You may please go ahead, sir.
Babu, your phone is on mute.
Oh, thank you. Good evening, everyone. A very happy, safe, and healthy new year to all of you. I will now take you through the financial highlights for the quarter. Net revenues grew 26% year-on-year to rupees 2,730 crores versus rupees 2,159 crores in Q3 financial year 21. Significant impact on revenues during the quarter were due to chlorovinyl segment was up 90% year-on-year to rupees 1,042 crores. Chemical businesses revenues were up 115% year-on-year at rupees 738 crores in Q3 22, driven by prices. ECU prices were up 126% year-on-year. Vinyl revenues were up 47% year-on-year at rupees 304 crores, driven primarily by higher prices of products. Calcium carbide prices were up 94% and PVC prices up 36%. Prices continue to be at healthy levels, however, having moved in a wide range. In the sugar business revenues, net of excise duty on country liquor sales were down 14% at rupees 565 crores as a result of lower sales volumes. Sugar volumes were down 29% as a result of lower monthly releases. Distillery volumes were down 17% due to lower availability of molasses in the month of October 21 and plant maintenance. Higher sugar and distillery prices partially mitigated the impact. In fertilizers, the revenue stood higher by 39% at rupees 367 crores, consequent to higher gas prices, which were at $15.1 per million BTU versus $8.2 last year, which is a pass-through. Current gas prices are over $20. The increased gas prices for FY22 have not yet been notified by the government and is the main reason for the increase in subsidy dues from the government. Petrester revenues were up 26% year-on-year at rupees 137 crores during the period. We have seen an improvement in retail as well as project verticals. On a sequential basis, revenues were up 5%. In SFS business, revenues were higher by 13% year-on-year at rupees 446 crores, led by wheat seeds, which were up 16%, and specialty nutrient products, which were up 28%. On profitability front during Q3 22, PBDIT improved by 46% year-on-year at rupees 614 crores. In chemicals, PBDIT came in at rupees 286 crores, higher by 193%. Vinyl PBDIT was up 24% year-on-year at rupees 125 crores. The growth was led by higher product prices and volumes. For both chemicals and vinyl businesses, input costs and power and fuel costs came in higher. However, they were more than offset by higher product prices, leading to absolute better margins. Sequentially, the PBDIT of vinyl business was lower given the steep increase in input costs and lower volumes of PVC. In sugar business, PBDIT came in higher at 13% year-on-year at rupees 132 crores, mainly due to higher sugar realizations and higher ethanol prices. Volumes were lower for reasons which were explained a little while ago. In the SFS business, the PBDIT was higher by 24%, led by better volumes and a higher provision for old inventory in earlier periods. Overall margins were stable. In the Fenesta business, PBDIT is up 16%, led by better prices and volumes. In the Bioseed business, PBDIT came in at negative rupees 32 crores versus negative rupees 8 crores during the same period last year. The performance was impacted by lower volumes and higher write-off and provisioning of inventory. PAT came in at rupees 350 crores, up 38% year-on-year. Coming to the 9 months financial year 22, net revenues were higher by 12% year-on-year at rupees 6,832 crores. The reasons for growth are largely in line as explained above. It is pertinent to mention here that chlorovinyl and Fenesta were impacted by pandemic and lockdown due to COVID-19 during Q1 financial year 21, resulting in loss of production leading to lower sales in the last year. Moving to the PBDIT for 9 months, we saw a consolidated growth of 44% at rupees 1,225 crores, led by strong PBDIT growth in chlorovinyl and Fenesta segments as a result of higher prices and volumes. PAT came in at rupees 666 crores, up 51%. Coming to the balance sheet, the company, as on 31st December 21, had surplus cash net of debt of rupees 245 crores versus net debt of rupees 385 crores as on 31st December 2020 and rupees 180 crores as on 31st March 21. Reduction in net debt is attributed to strong operating cash flows over the last 12 months. Further, there is seasonality in capital employed, which is high during Q4 due to inventory build-up in sugar and urea subsidy outstanding from the government. The ROCE also saw an improvement at 27% versus 17% for December 20 and 23% for September 21. During the quarter, the board declared a second interim dividend at 260%, amounting to rupees 81.1 crores. Total dividend for 9 months ending 31st December is 490%, amounting to rupees 152.8 crores versus 275% last year, amounting to rupees 85.8 crores. Overall, despite the macro challenges, the company has delivered a robust performance. The company continues its healthy financial position with a strong balance sheet. Our growth plans continue to be on track. That brings me to the end of the financial discussion, and we will be happy to take any questions that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ahmad from Unifi Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, the first question is the tax rate. I believe we had some tax holidays in the past under Section 80 EIA, and this year so far, and specifically in the Q3, the tax rate is on higher side. So can you please explain the reason and guide on the full year tax rate for current fiscal and the next fiscal?
Amit, please.
Yeah. So see, Ahmed, the tax rate is higher at about 32%, and I think for full year it should be around that level. And two key reasons why it has gone up. One, the overall profitability has gone up, and the tax benefits, as you rightly mentioned on EIA, they have come down also because the input prices have gone up. So if the coal prices go up, the benefit on account of transfer price goes down. So that's another reason why the ATIA benefit is lower this year. Next year, we'll have to see how the prices of coal pan out, and that's how we will be able to decide the tax rate. But it should be still in the range of around 30% plus next year as well.
Okay. So are you planning to move to 25% tax regime anytime soon?
See, we will see basis our, how the cash flow is, because we still have MAT credit of a higher degree of close to a little over 250 crores. So that also we'll have to see. So probably not immediately, definitely not in next year, probably the year after that, or maybe 1-2 years down the line.
Okay. Fine. Makes sense. Thank you. And just a second question in the bioseed business, and we had this discussion even in the last quarter call. The business has not grown for last few years, and there is hardly any profitability, and even the decent chunk of our capital is stuck in the business. So can you please explain strategically how does this business fit in the long-term plans of the company? I'm not asking from a perspective of a next Rabi season or next Kharif season, from say 3 to 5 years perspective. That is first question on the bioseed. And the second part is this year, this quarter, we had about 30-35 crore loss in this business. Historically, we had about 10-12 crore loss in Q3. So the losses were also on the higher side. So can you please explain the same?
AK, would you like to answer that?
Yeah. But it's true that the performance has been under pressure for the last 2 years. And it's not only us, most of the seed companies have suffered in the last 2 years because of several reasons. But I'll not go into that. But what I can tell you that ours is a research-based seed company. We have a very comprehensive research program across many crops, including cotton, corn, paddy, mustard, and vegetables also. Our product pipelines are healthy, and some of our newer products which we have introduced this year, there the performance has been far more better than, and we have almost doubled the sales in those products. So, and we have a following pipeline also very strong. So we also have taken several measures in terms of improving our processes, in terms of adding on to the capability enhancement, churning our portfolio. We're also looking at export markets. So we're quite hopeful and confident in the coming years we should see the business turn around. And as I said, with favorable regulatory policies and favorable monsoon conditions, I think we are quite confident that we will be able to turn that around in the next coming years.
Okay. And this quarter, what was the reason for the higher losses? Some provision in inventory?
There are several. You would know that the seed industry across has not done well this year. Several reasons. If you look at the cotton, the acreages have gone down, and then there were large proportion of illegal seeds which were sold in the market, and then there were erratic rainfalls. So this is similarly the government subsidy programs, because of the corona second wave, the government didn't spend on seed subsidy programs, which they used to do every year. So the common purchasing went down. And for us particularly, there were some restrictions imposed directly or indirectly on paddy growing, particularly in some southern states where we have a very strong presence. So that has affected our performance more than the other seed companies. But overall, the other seed companies also haven't done well. Both two successive years, both 3 years in FY21 and FY22. Also, the COVID effect has been more on the seed industry than the previous year. And we also have rationalized and done some churning on our inventories and taken some calls on slow-moving inventories in terms of making some provisions. So overall, that's the reason for a relatively poor performance that you see this year.
Okay, makes sense. So last question from my side. So we are seeing that caustic and PVC prices are cooling off, and it is very obvious from such unsustainable levels. But how do you see, I know it's very hard to guess for anyone how the prices will move, but how do you see the demand-supply situation evolving in the next year or so? Will the prices continue to normalize or will remain at elevated levels, considering that coal has also started to move up again? So how do you see the commodity prices?
KK, you would like to take that?
Yes, the prices have been all-time high we have seen in Q3, particularly if you look at both the caustic chlorine prices as well as the PVC prices. They have been at their highest ever. PVC prices touched close to $1,900 in October, but they have already corrected to a large extent. We do expect that the prices will still continue to be healthy, but not in the range that we have seen in Q3. Maybe they'll be more like Q1 and Q2 kind of prices on an average. The demand is still strong. I think we don't see any problem in the demand. The demand both for PVC and caustic soda is expected to remain strong. Did I answer your question?
Yes. And just a small thing on the sugar exports volume. Do we expect the export volume to be same as last year Q4 in sugar exports? This next Q4?
See, as far as sugar exports are concerned, as was mentioned in the opening remarks, the exports last year was roughly 7 million tons. And this year, so far, 4 million tons has been contracted and 2 million has already been exported. We do expect export level of roughly 5 to 5.5 million tons to happen this year, essentially from Karnataka and Maharashtra, because there is no government subsidy this year on the sugar exports.
Okay, makes sense. And sir, is there any huge delay in the downstream project? You mentioned in press release and presentation that there is some delay because of COVID and loss of supply chain disruption. So the downstream projects will come on in H2FY23, right?
Amit, you want to take that?
Yes. Sorry, as mentioned in CMD's message as well, that we are expecting delays given the COVID-19 waves and erratic rains. So yes, there will be a delay, but that delay should be not more than a quarter. And we are trying to see how best we can curtail the delay.
Okay. That answered my question. Thank you so much.
Yeah. Thank you.
Thank you. The next question is from the line of Pratiksha from Equities Investment. Please go ahead.
Good evening, sir. Thank you for the opportunity. So my first question is on caustic. So in the presentation mentioned that the exports have gone up at industry level. Are we seeing similar trend for DCM Shriram? And how do we see this trajectory going ahead? Do we think that export will be a higher contributor, relatively speaking?
Yes. If we see the performance last year and for the coming year, the fortunate part, as I mentioned earlier, also was the international prices are fairly satisfactory. So because of that, we do expect exports to go up. Our exports also almost doubled. We did, I think, if I recollect, 22,000 tons earlier. This time we did about 44,000 tons, 45,000 tons. So it is going up, and we expect it to go up a little more in the coming year.
Okay. And do we have any, margins are better in export or domestic or vice versa? How does it work?
These are commodities. So the prices of commodities vary. So I think it's a matter of really trying a balance between supply and demand. So that's our objective. We undertake exports whenever we can, depending on the supply-demand situation in the country also.
Right. And in your opening remarks, you mentioned that some of the supply constraints in October are back, and you expect certain plant shutdowns in USA. If you could just elaborate about how do you look at supply constraints for, say, next 2 quarters in overseas market?
I think overseas is difficult to say because of climatic conditions. The changes happen so rapidly. But I think our expectation is that, yes, the international prices have subdued compared to the peaks they reached. And the peaks they reached also were unusual. I mean, we have to be honest with that. That's not tenable. But it's come down to a more decent level, and we expect it to stay around this level for some more time.
Okay. And how about power costs, sir? Do we think that also has peaked out, or we continue to see certain input pressure ahead also?
See, the power cost, if you know, the coal cost a couple of months back had peaked a lot. But it's come down. But it's picked up again a little bit because Indonesia banned the export of coal 2 months back.
Right.
So industry has taken it up in Indonesia also, from India also. So it's gone up a little bit. But I think the input cost will be a little challenging going ahead. Because freight is also a serious matter. I think you all are aware that the international freight has also gone up substantially. So all these things are impacting the input cost.
So, for Indonesia coal ban, what I understand is it's probably going to be a continuing feature for some time. So then the prices we can expect to remain high, and while the realizations have moderated, the input cost will continue to remain high. Is that understanding correct?
Well, I think the input cost, because there's coal available in South Africa also and other countries also. So it's not only Indonesia. And Australian coal is also coming in. A lot of that is going to China, which was going earlier from Indonesia also. So coal is moving around. And our expectation is, from what we've discussed and understand, that Indonesia might change their policy going forward. Because all the coal in Indonesia is not being picked up by the domestic users. So if they change the policy, it will definitely ease the situation. But commodity prices are so volatile. No one can make any commitment.
Understandable. And sir, on sugar, if we could just highlight what would be the mix of our ethanol from juice versus B heavy versus C heavy, and what would be our optimum target mix that we would have
Ajit?
Amit, do you have the breakup?
See, in this quarter, we've produced ethanol from cane juice directly of about 110 lakh liters, and from B heavy we've produced in this quarter close to about 74 lakh liters. So that's the broad breakup in terms of our ethanol.
Okay. And if you could just explain why would we what kind of dependence we have on outside molasses, and I would like to assume that we would be self-sufficient. So why would such a situation be created?
Ajit?
See, essentially we are short of molasses by roughly 12 to 13 lakh quintals. And that's one of the reasons also we are putting up this multi-feed 120 Kl distillery, and using of cane juice also enhances the output of the ethanol. So a combination of the multi-feed distillery, use of cane juice, use of more B heavy, and at the end of the day, the effort is to increase the level of crush in terms of lakh quintals. So our cane division is actively working with the farmers to increase the level of cane that we crush, so that we're able to have adequate feed for the ethanol manufacturing.
Okay. All right. And last question on Fenesta front. So we've seen some small, slight margin contraction here. So is this more of a strategic call that we would want to increase our scale, and we will be okay to compromise margins to a certain extent here?
Who'll take that?
Yeah. Actually, there have been severe cost pressures in Fenesta also because of PVC, steel, everything, rupee depreciation, etc. So it's more to do with cost pressures. And it's very marginal. And
okay, but would we be able to pass this on?
Sorry, could you repeat yourself?
Would we be able to pass on these input cost pressures, in our realization, without impacting our volumes? Or
it is. The plan is, and the working is in that direction. And so far, the new bookings are at a higher price point. But between booking and delivery, there's anywhere between 3 months to 9 months time lag, or 2 months to 9 months. So one can't really forecast the long term. But yes, prices are being increased every month or every 2 months to take care of the cost pressures.
All right. And last thing, if you could elaborate a little bit about the aluminium offerings that we are working on, and like how do they compare to our existing in terms of margins, existing products?
For the aluminium.
The margins are aluminium systems.
Aluminium systems of
aluminium we introduced.
Yeah.
System aluminium was introduced, I think, about a year and a half ago. And the margins as a percentage may be lower, but the absolute amount is higher. The product is taking traction. In fact, we are expanding our manufacturing, fabrication and manufacturing capacities because it has gone faster than we expected. And we have introduced a new series called Professional Series, which is at a lower price point. So it is taking a good traction, and we expect it to pick up in the time to come.
All right. Thank you.
Thank you.
Thank you. The next question is from the line of Nival Jamodia from Anvil Research. Please go ahead.
Good afternoon, sir.
Good afternoon.
So my question is predominantly on the chemical side. So if you could break down the revenues as well as the PBIT between the caustic business as well as our revenue and the PBIT from the value-added products like hydrogen, aluminum chloride.
Amit, Jesse, what do we share?
Yeah, see, primarily the revenue will be from caustic soda itself, caustic soda and flakes. So from other products, it ranges between 15 to 20% in terms of the top line. Now, bottom line always will keep changing depending on how much we are making on caustic. So, for example, in the last couple of quarters, we've seen that the other products have contributed around 30%. This year, because we have earned more on caustic, so it's about 10-12%, the other products' contribution.
Okay.
And hydrogen is the major part of that. So
correct. Yeah. So you mentioned last quarter also the same remarks.
Yeah.
And sir, second question is on the input cost. Like you mentioned that power cost has gone up because of the increase in the coal cost, and even salt cost has gone up. So if you can quantify in terms of in between the quarters, how much is the quantum increase for both of these raw materials?
See, as a practice, I'm sorry, we generally don't share our costs, right?
Yeah.
But yes, there has been a significant increase. So that's there.
Correct. Or else if you can say in terms of, let's say if last quarter was on a scale of 100, this quarter how much it has gone up? Some sort of 100.
So it would have gone up ballpark. I don't have the number right away, but in excess of 50% is what would be the cost increase.
Okay. Thank you, sir. And if I have further questions, I'll join back in the queue.
Thank you.
Thank you. The next question is from the line of Pratik Tolia from Systematic Shares. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Congrats on good set of numbers. So just a couple of questions. Firstly, again, on the cost front. I think in the last call, you had also mentioned that you were looking at various other, inputs apart from coal. I think you were looking at something like lignite and all. So I think we were still working on those ones. So if you can just share what is happening on that, and as we started using, and what percentage of our, this raw material now is our feedstock is coming from non-coal.
Amit?
Yeah. So, Pratik, both at Bharuch and Kota, it ranges between 10 to 15% as the total mix of other than coal. So whether it is lignite or biomass, depending on availability, that's the kind of mix.
Sure. And so in terms of cost-wise,
it gets limited because the boiler, there is a limitation of each boiler as to how much it can intake. Right, so it's both a mix of availability as well as the type of boiler.
And for the cost front, how much are we able to save?
So I don't have the number right away, but definitely both these are cheaper.
Yeah, that's true. But then it would bring down our total cost by say 8-10%.
I don't think that kind of an impact with the 10% because see, lignite cost also had gone up significantly because coal costs went up till even lignite went up.
Sure.
Right.
Okay. And so secondly, on this topic from on the capex front, I think in the opening remarks it was mentioned that caustic soda we are expanding to 750 and flaker to 600. But is that are those numbers correct? Because last call we had talked about 700 TPD of caustic and 500 TPD for flaker.
Right. So Pratik, there has been some reconfiguration, right?
Okay.
Given the market demand and certain other economies that we thought. So we have increased it from 700 to 850 and flaker from 500 to 600.
Sure. So what is the increase in our investments there?
So see,
because last time we mentioned around 700 crores.
Yeah. So see, it's a holistic pool that we'll have to work at because there are cost increases which are happening because of this scale element, and there are cost increases which are happening also because of the price increase, the metal price increases especially, right? So we are just working it out. How do we rebalance the whole portfolio so that the return on the projects continue to be healthy? So we are just reworking that.
Okay. So last time I think you had mentioned by Q4FY23 these plants will be operational, but now with this additional capex that you are doing, so the timelines will get set?
The additional capex, I don't think will impact the timeline. As we mentioned, it is more to do with the delays on account of COVID, as well as the extensive rains that happened in that region, which have caused the delay. So last time what we had mentioned was that despite COVID, we should be able to cover up. But with the rains and with third wave also slightly impacting, we are finding it difficult to cover up the time loss that was there because of COVID second wave. So yeah, that's why about a quarter delay is what we're expecting. But we're still working on seeing how to cover it up to maximum extent.
Understood. And so lastly, on the sugar capex also in the PPT you mentioned that there are these additional capex that you are undertaking in sugar. If you could just highlight what are these and what is the amount that you're spending on each of them?
Yeah. So there's this 120 Kld Multi-Feed Distillery where we are spending around 145 crores.
Right.
Then there's a mix of capexes which is expanding sugar at Ajbapur by 3,000 TCD. Then we are converting our refinery, converting our sugar operations to refined sugar from currently we can do up to 5,000 TCD. We are going up to 26,500 TCD for refining operations. And what we are also doing is that in terms of grain-based, the miller that you have for the grain attachment, that we have for 120 KLD distillery, but we are enhancing it to 260 KLD. Though the distillery size remains at 120, but that we're increasing to 260 KLD. All that will cost us another, if I remember correctly, another 350 odd crores.
358. Yeah.
Right, 358. Yeah, that will cost us. And the reason why we are doing this 120 to 260 is again what was just discussed a while back, that there are shortage of sea molasses or the molasses in the off season. So we are trying to see that how do we ensure that our distilleries don't remain idle for about a month through, and we are able to source the molasses from in-house feedstock.
Sure. So all of this is happening only at Ajbapur, right?
See, the most of it is in Ajbapur, you're right, but refining operations partly in Haryana as well. So Haryana already has a refinery, but that capacity also will go up.
Okay, understood.
But majority of it is in Ajbapur, you're right.
Sure. So that's it from my side. Thank you and wish you all the very best.
Thank you.
Thanks.
Thank you. The next question is from the line of Chintan Chheda from Quest Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity.
Hi.
So my question is related to the caustic soda business. So firstly, can you please give some insights on the current demand supply situation of the caustic soda industry in India, right? And secondly, there was one anti-dumping being recommended in December 21 from 4 countries. So what are the chances of that getting implemented and the impact of the same on the industry and our business?
The caustic soda demand actually is moving, and touchwood is growing at about 6-7% a year. And that's moved quite stable. We expect it to grow now also at about the same level. So that's going to be a consistent growth, which is moving well. And regarding this additional duty, anti-dumping duty, in fact, the Chemical Ministry has recommended it to the Finance Ministry. So it is in the Finance Ministry right now. And we are waiting for them to approve this. We sincerely hope it does happen, but no one can say. But the All India Distillers, the Alkali Manufacturers Association, they are working on this and in conversation with the government on this matter.
Okay. And sir, on the supply side, so how is the industry poised right now? So are we seeing some imports, or how is that going?
Fortunately, I would say that a lot of aluminium people and others used to import a lot in the past. But I think the industry also felt now it's better that why don't we supply them, especially when international prices are also better. So I think a lot of manufacturers have got in touch and have a contract going with the aluminium users directly. So we are supplying also, they're also supplying, they're going by rake. So there's a lot of material going. So good thing is imports have come down. But exports have also gone up, which is also a positive sign because of the pricing. So it's moving on both ways, but imports have come down.
Okay. So would that mean that in such a situation, there would be some tightness in this industry for, say, calendar year 22?
Pardon me?
There would be some supply tightness for the industry for the calendar year 22?
I don't think so. I don't think so, because the capacity in the country is quite okay. And people are running at a good rate of production. And I think in the next 4 or 5 months, if I'm not mistaken, there's an expansion coming up by Grasim and 6 months later by someone else. So I think all these commodities, if you see over the last 10 years, the capacity expansion keeps happening somewhere or the other. So I don't see any tightness really happening too much across the board. They could be marginal for a short period of time because of some dislocation in movement or something. But there's adequate availability in the country.
Okay. And sir, secondly, the chlorine that we generate as a byproduct in caustic soda, okay. So how much of that we use captively and how much is sold to the outside market?
Oh, I don't, Amit, do you remember how much is used captive?
So at Kota plant, where we have capacity close to 500 TCD of caustic, there almost 40% has a captive sink with our PVC business, right? And at Bharuch, where we have a capacity of 1350 tons per day, there we have an aluminum chloride plant which is being expanded. So that has a chlorine sink of about 4%. We are adding downstream there, which will further add about 15% of chlorine sink. Also, we are supplying almost 30-35% through pipelines to the chemicals companies close by. So there is significant sink that we have.
Okay, but then this would be not more than 50% for us, right? Combining both the capacities?
Combining both, it will be around, including pipeline, it should be around 50-55%, yes. The rest is sold in the market for HCl and things like that, and to other manufacturers, internals.
Okay. And post this entire, the CAPEX projects that we have undertaken, this will remain in a similar range, or this will go up higher?
It should remain in a similar range. And see, our CAPEX is still about a little over a year away. And we are seeing a lot of growth happening in the chemical industries. So we do expect this to catch up.
Okay. And how has been the market for chlorine recently? So is there been any change, or it's still the same, like it's difficult to sell or dispose of chlorine?
See, chlorine market for most part of the year has been good. Of late, yes, we have seen some softening in demand for various factors. Because some of the consumer industries, their output levels have come down. So chlorine, always has been a bit of a challenge, but it has been, as I said, good for the last 1.5 years. Of late, yes, there is some reduction in demand because of some consuming sectors. But that should come back, is what we expect. But then as we said, we ourselves are working on downstream utilization of chlorine, so that should help.
Okay. And sir, lastly, in your opening remarks, you mentioned that in our PVC business, there's been some supply which has started coming out from China and US. So how has been that impacting our business?
No, I don't think we said so. By KK, would like to answer that?
Yeah. There's very little which is coming from China at this point of time, not more than 6,000 to 8,000 tons. Practically nothing from US at this point of time. But in future, yes, if it comes, it can have an impact. But China prices also continue to be high. So today, globally, the prices are similar. There might be difference between different regions, but all are everywhere the prices are quite high. So we don't see that making any impact.
Okay, so you don't foresee any major risk from imports into India, right?
The imports are, we still are largely, our entire consumption, almost 40% is met by the domestic producers, 60% which still comes from imports. And that sets the price of the domestic producers also. It's always the domestic production which gets sold first. So the imports, obviously, there is a delay in the time between they book and it comes. So we don't see that as a threat.
Okay, great.
If the current duties continue, the duties are also important.
Okay. That was really helpful, sir. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Rohit Nagaraj from Emkay Global. Please go ahead.
Yeah, thanks for the opportunity and congrats on good set of numbers. So the first question is on caustic front. So in your opening remarks, you indicated that the demand has been impacted from paper and textiles in the month of December. How are we currently looking at after, say, 3 weeks of January in terms of overall demand, particularly from these two sectors and generally across the board, given that the pricing environment is still at an elevated level? Thank you.
As I mentioned earlier, that the growth in India is moving at 6-7% a year, and we expect that to carry on. A little ups and downs happen due to aberrations in each industry. Frankly speaking, I don't know exactly what is the figure of reduction in paper and all, but 6-7% growth is likely to happen in the coming year also, which is going to keep the industry at a fairly even keel.
All right. Fair enough. And sir, the similar question I think earlier was also asked in terms of the input cost and particularly coal power cost. So we have seen again a similar situation as it was in Q2, in Q3. So in current quarter, has the power cost as well as the logistic cost alleviated to some extent, or is it going in the similar direction as it was in Q3? Thank you.
Amit?
Yeah. So see, as I mentioned in the previous question, that if I see YOY, the costs have gone up in excess of 50% on the overall variable cost front, largely led by energy prices. Sequentially, they would have gone up in the range of 15 to 20%, 20% ballpark.
Yeah. Sorry, I was asking from Q3 to Q4, that is current, 3 weeks of January. Are we seeing a similar trend what it was in Q3, or there has been some softening which is
there has been a marginal softening, but you've seen again coal prices going up, but they are at least not as high as what we saw in November. So it's difficult to say. We are still in January, so how it will pan out during the quarter, it will be difficult to say.
Sure. That's very helpful. Yeah. Fair enough. That's very helpful. Thank you and best of luck, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments.
Thank you. Ladies and gentlemen, thank you for your participation in our Q3 and 9-month financial year ending 22 earnings conference call. We will continue to work on our strategic direction of growing our businesses using scale, multiple revenue streams, enhancing efficiencies, and achieving higher integration. We will continue to make more strategic investments that augur well for the medium to long-term growth of the company while maintaining a healthy balance sheet. Once again, I'd like to thank you for taking time out and joining us today. Please take care of yourselves and your family and follow all the precautionary advisory of the government, including proper vaccination. Once again, wish you and your family good health and be safe and well. Thank you very much.
Thank you very much.